Hello and welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. Before we jump into it, standard disclaimer, none of this is investing advice. Do your own due diligence. And today's guest is a respected analyst in the precious metals space and the editor and publisher of the TF Metals Report, Mr. Craig Hemke. Welcome to the program.
Hey, Jesse, this is going to be fun. Thanks for the invitation.
Yes, thank you for coming. I want to get started like I do with all of my guests on your own journey into investing. When did you start, and then what drew you to the precious metals space?
Oh boy. Well, I guess I started in 1987. I had a brother who was a stockbroker, a brother-in-law who was a commodities broker in the late 80s, and I was in college back then. And in the summer of or spring maybe of 87, my commodity broker brother-in-law got a friend of mine and I to buy some soybean calls. And the weather got hot and they took off. And I mean, I'm 21-year-old kid, and our account's up, 4 and 5 figures. Well, of course, we blew it all when in the stock market crashed that year, but I was hooked. Okay. Did it again the next year. It got really, really hot. That might've been the first time beans went in the teens in 1988. That was some kind of summer. So anyway, I got out of college and got my Series 7 license and all those other securities licenses in 1990. And I was a stockbroker for 7 or 8 years. I've been around the industry all the way around 2008. And then the financial crisis really opened my eyes to what a sham the whole thing is. And, you think you're out here in the middle of nowhere and you think that, the market is based off fundamentals and PE ratios and stuff like, no, it's based on monetary policies, the big bank trading desks, the dark pools, all that stuff is HFT. So that was all kind of eye-opening. I started reading Zero Hedge. It was at Zero Hedge where I got the moniker Turd Ferguson. And Turd Ferguson is the TF in TF Metals Report. We've been doing it since 2010. And the tagline has always been, Jesse, that we are preparing for the end of the great Keynesian experiment. Keynes being the economist from the 30s and 40s who kind of advocated for this kind of debt-based system, which is fine until you get to the point where you can't service it any longer and everything starts growing exponentially. That's the end of the experiment. And that's unfortunately where we are.
I want to dive into that next because ultimately I want to get into precious metals specifically. It's obviously connected to all of this. But I wanted to get your view on the state of the economy, the state of the global financial system, the state of financial markets. We're seeing a lot of inflation, obviously, and the number that the Fed is giving us is much lower than what it really is. And most people who are in the know at least have an idea that they lie through their teeth quite a bit. There's people talking about a recession up ahead. Broad equities are correcting quite dramatically. What is your view on the current state of all of that, and what challenges do you see up ahead?
Well, this has been brewing now for quite some time. In a bigger picture, the inflation stuff, I mean, we've been worried about that for 10 years when this day would finally come, because you can't print yourself to prosperity, because if you could, then everybody would just do it, but it never works that way. I've been rereading the book When Money Dies, that first came out in like 1975, and it was all the rage in 2010 and 11 when QE really got going, because we thought we were going down the Weimarization then, and we certainly seem to be going down that road now. And the parallels to Weimar Germany from 1921 and 1922, political strife, everybody being pitted against each other, all that stuff. I mean, it's like, oh my gosh. So anyway, where are we now? This is a really perilous time. I remember, and you probably do too. I mean, it used to be you'd hear from Alan Greenspan once every 6 months. And like CNBC would have a reporter, showing him getting out of his limo and walking up to Capitol Hill for his Humphrey Hawkins testimony. Everybody would be like looking at his briefcase, and trying to decide, what he was. And that was the only time you ever heard from those people. And now it's like 2 or 3 times a day you get some Fed goon out there. If there's an open microphone, they've been conditioned, even though they've never had actual jobs, right? Most of them have only been in academia or employed by the Fed their whole lives. But they've been conditioned to believe that they're the masters of the universe, that they have total control over what is uncontrollable, chaotic system. And so now we are headed down a path where it's very dangerous because, again, they think they've got it under control and they don't. Bill Dudley, the former head of the New York Fed, came out in April and said, the goal of the Fed is to inflict losses on the stock market. They're going to try to affect the demand side and reverse the wealth effect. It's like nobody believed him. Okay. Well, they're being successful, and now it's just rippling everywhere. I mean, troubles all over Europe. Japan is an absolute disaster as they're trying to defend, decades of, or a decade of yield curve control. And now the Fed is really going to get a cold splash of water in their face. A 2-year note as we speak is about 3.25%. I mean, that's just, mortgage markets are imploding. That they think they're still going to be hiking because they're the masters of the universe. Oh my, I mean, I don't know where it heads from here. In the end, though, I know how it ends up, but I just, in the days and weeks and months to come, I'm not sure, how it's going to flow day to day.
Do you ascribe to any of the theories that there could be a controlled demolition going on, that the Fed and the powers that be kind of see the writing on the wall and know that a situation similar to Weimar could be coming around the corner? So in their view, maybe why don't we just control this demolition as much as we can and bring the markets down on our terms? Is that possible?
Yeah, I mean, I there are certainly a lot of people that think that, and understandably so. I mean, look, if I'm just as dope out here in the middle of nowhere, if I can figure this out, you sure would think Jay Powell, right? But then again, I think it's human nature. If everybody tells you how great you are, eventually you seem to think you're great, right? And they think they're like demigods of the financial world. And so I'm not sure. I think a vast majority of decision makers are so confident in themselves that they think they've got it all in control. Some folks say, yeah, COVID was this thing, to collapse the global economy because they know we're at the end of it and all that stuff. Yeah, I don't know. How can they not know that this is unsustainable? But I'm not sure we're at the point yet where they're like, oh yeah, let's just blow everything up, because I think they're still so arrogantly self-confident that they think they can still fix it. Thus all the talk about soft landings and all this other crapola.
So let's touch on precious metals now. It's often said that when precious metals are doing really well, it could also mean that society at large maybe isn't doing so well. And it feels like we're in that situation a little bit right now. I recently read an article by Sprott Money stating that the stage is set for a bull run. Rick Rule has stated that he believes we're in a precious metals bull run. How do you see things right now, and what do you see as the main catalyst that could ignite a spark to push the price of metals higher?
Well, in a traditional sense, the way these markets are structured and the high frequency trading computers and the hedge funds that use them and all that kind of stuff, it's mainly about real interest rates. And the Fed, I long held the position, it's going back to June of 2020, that we're heading into a stagflationary recession would be the ultimate outcome of all this COVID stuff. And now here we are. And so knowing that, you try to plan accordingly, and try to position yourself in the precious metals. Again, the key in the current system is real interest rates. The Fed, very unlikely to ever get the Fed funds rate up above inflation. Now they try to scam you and say, no, it's inflation expectations that matter, which is, how these machines trade. As if, the 10-year note's 3.25, but inflation expectations are 3.25. So really the real rate is zero. Bull crap, it's zero. The real rate is -5 right now. So if you're going to average zero over the next 5 years, you're going to have some pretty positive real interest rates, right? If you're starting out with -5 the first year, but nah, that's too complicated for the pre-programmed computers. Okay, that's the first thing. Let's see where I kind of lost my train of thought for a second, Jesse, because that's so frustrating. But the other part of this equation is how precious metals are priced in the first place. Okay, after Nixon closed the gold window, and at the conclusion of the London Gold Pool, which was 3 years later, where 8 countries, primarily the U.S., pledged physical gold to defend that $35 an ounce peg. The financial world decided that we needed to have pretend gold. just as much as regular. I mean, we can't come up with actual gold. All these, the US pegging it on their own through the 50s didn't work. The gold pool didn't work. Nixon had to close the gold window, all this stuff. They said, aha, here's what we can do. We'll invent gold futures, and we'll invent unallocated accounts, and we'll invent forward contracts, and we'll invent ETFs and all these other things that are, they've taken 1 ounce of gold and levered it, I don't know, 10 times, some say 50 times. And what ultimately is going to happen is a deleveraging where, just like maybe they're kind of seeing in the crypto world or any place else, people say, I don't want all this crap, all these, what they call them, if I can swear, shit coins, right? All those things look like they're going to zero, and Bitcoin's, falling precipitously too. Well, all this other fake gold that's not backed by actual, but it's just an obligation. It's just, I own this ETF. I know I can't get physical gold out of it, but it gives me exposure price. When the time comes that people actually want the physical metal and all that leverage has to be unwound, well, okay, now we're getting somewhere. But for now, we still have this digital derivative, this kind of fractional reserve pricing scheme. And the key to that will be real interest rates. And the perception right now is that real interest rates are flat. They're not. And as the Fed is forced to change course, the curtain is once pulled back, and the Fed and all these other central bankers are revealed that they're going to do anything to keep the plate spinning. Okay, then we're going to have this bull run that, like Rick Rule was talking about, regardless of the pricing scheme.
I've spoken to a lot of guests on this show at length about the manipulation of the precious metals markets. I get different reasons on why they're being manipulated. What's your view? And, you were talking about the derivatives market there, which obviously plays a major role. What are the main factors you think that could eventually bring the manipulation to an end and thus allow for true price discovery of the metals?
Well, the latter part of that is physical demand. Again, it's a bank run, right? As long as if you've got $100,000 in the bank, and you're confident the bank's going to be there tomorrow, then you're not going to go to the bank and try to withdraw $100,000. And they know that because they got it all loaned out. They don't even have $100,000 in the safe. They might let you take 5,000 or 10,000. As long as you're confident that the bank's going to be open tomorrow, you're fine. And that's kind of how the gold market works. And it's run by these big banks. We call them bullion banks, JP Morgan and Goldman Sachs and Morgan Stanley and Deutsche Bank. I mean, you can run down the list, UBS. As long as confidence remains in the system, okay, I've got an unallocated promise in an account in Switzerland or Canada or whatever. And they say I can get my gold in 90 days if I ever want it. Okay, fine. It's when the confidence fails, you get a bank run, and all of a sudden you're like, I want my gold now. And everybody shows up at once. That's how it ends. The first part of your question, Jesse, just remind me real quick.
The reasons for why it's being manipulated.
Oh, okay. I've known Chris and Bill at GATA for over a decade, and they've done a wonderful job over the years documenting all the stuff and the history of it. And there was a lot of, and it's documented, central bank desire to contain the price of gold coming into the 80s and the 90s and beyond, because a rising price of gold was viewed as a no confidence vote in their fiat currency. Okay. I really don't think that matters anymore. When the central bankers admit, like Bernanke, that he didn't give a rat's patootie about gold, I think he's telling the truth. I don't think they care. I think they are so busy and so concerned about their little, fiat empire. They could care less about gold. So what you have now and the manipulation that occurs is done at just the bank level, that they know that they have a monopolistic control of that pricing scheme that I discussed. And they are short, thousands of tons of silver, hundreds of tons of gold, and they have to manage that position. They have to manage the price because you've got the trading desk in New York that trades on COMEX. That's on one side. On the other side of the pond, they've got the physical desk in London where the metal has to flow. And those prices have to have some kind of legitimacy connection. Otherwise, what are you doing? And so the bullion bank delivering metal has to kind of work with New York, make sure some orders get filled and some don't get filled and all that stuff. So that's where the manipulation is. And that's what we've seen. I mean, that's the Department of Justice looking into JP Morgan, and Deutsche Bank and UBS and all the rest. That's where the manipulation is now, is these banks trying to manage their short positions, manage the flow of metal to try to keep their pricing scheme alive.
So when and if the whole system collapses, do you think there's a possibility that we could go back to a gold standard, either gold and silver, using it physically as currency, or having a new gold-backed currency or some other system? Is that a possibility in your opinion?
Well, it's the historical precedent for how these types of things work out, first and foremost. Um, People say, no, you can't. There's not enough gold. No, there's plenty of friggin' gold. It's just not priced high enough. There's not enough gold at $2,000. There's a boatload of gold at $20,000 to back, your currency scheme going forward or whatever it is. Okay. So it's not a function of the amount of gold. It's a function of, whatever price it's going to take to, restart everything. And history, again, is replete with examples. You're going all the way back to the Roman Empire of the pendulum swinging from sound money all the way over to completely unsound, and just fiat money until confidence collapses. And then you got to reinstore confidence and the thing just swings right back. This takes, 40, 50, 100 years. This takes like overnight a lot of times. And why is that? You think of just any kind of, even just a closed loop economy. Jess, you come to me and you want to sell me your bushel of wheat you've grown and, or that I've grown. You want to buy from me that I've grown. And I say, okay, fine. You give me $5 of your dollars over there. Okay. We'll do that. But I'm not going to be willing to do that if I think by tomorrow it's going to be 10 of those dollars. If I don't have confidence in the currency, everything stops, right? That's Weimar. So then once that blows up, the way you reestablish some kind of confidence to get economic activity going again is to reback your currency with something sound and stop the constant devaluation and dilution of it. And that's what some kind of hard asset backing will be, whether it's gold, silver, all commodities or something, but that's what it will have to be again. So it'll all come to a screeching halt. The pendulum will swing back really, really fast. And I just can't imagine with 200 or 2000 years of precedent that gold for certain won't be a part of it in this next reset. I mean, that term's been abused, but that's kind of what it is.
I want to get your thoughts on central bank digital currencies. How soon do you see these potentially being rolled out, and are people just going to go along with it and accept it? I foresee a scenario where if they roll these currencies out, that they'll do something like give everybody $1,000 worth for free in their digital wallet just to kind of force adoption. How do you think that's all going to work out? And do you think that's ultimately going to collapse as well?
Yes, I think they're definitely going to do it because, again, the central bankers know. I mean, that's why it has always been, well, our dual mandate is promote full employment and 2% inflation. Well, wait a second. I don't even want 2% inflation. Why do I want? But they have to have it, to get this debt scheme to keep on rolling. Well, it's getting to the point now where that debt service cost is so high, they've just got to keep printing and printing and printing. Well, at most government level, I mean, you've got to issue your treasury notes, your sovereign debt, and then the central bank buys it, and then the cash goes out. Then the cash gets levered up at the local banks as it gets loaned out and all that kind of stuff. And these central banks want to be more efficient about it. They don't want to wait for the politicians to act, right? Like TARP. Go back to 2008. We need $700 billion right now. Well, it's got to go to the House, and then they got to vote, and all these politicians, they got to write their. No, we want to just be able to bang, send $700 billion in CBDC digital dollars to the banks. So I don't have any doubt in my mind that that's where. And remember too, dude, after coming out of that in 2008, remember they were writing into law, especially in Europe, bail-ins. We're like, you become a creditor at your bank. They're just going to take the banks. They're just going to take your cash. I mean, there's a lot of stuff that people forgot about that came out of the financial crisis that may all of a sudden come to the forefront again in the time to come.
So do you foresee the central bank digital currencies being much like fiat in that they're backed by nothing but government promises, and that eventually, it's going to reach the end of the road?
Right. Exactly. Exactly. And in the end, see, this was all part of the war on cash in the first place. I mean, remember, spin back, I don't know, 4 or 5 years. Remember, they're trying to eliminate physical. What do you need it for? You got your card, you got your phone. What do you need cash for? In fact, the only people that use physical cash anyway, it's all illicit. It's like drug dealers and bookies and stuff like that. They're trying to get rid of it all. Why? Because that gives you some sovereignty. If you have actual cash, then you just have some kind of control over your finances. If your wealth is nothing but zeros and ones, it can be bailed in. It can be taken from you. You do get sideways with the state. They accuse you of a crime. They freeze all. Look at the Canadian people that like back those truckers that all they simply wanted was to be able to drive their trucks without having to get a vaccine. And man, if you gave them $20, they seize your bank account. So all of this and the central bank digital currency all ties together, right, into this authoritarian kind of control, and then give them the ability to bypass, legislation and stuff, and just immediately, we want to get $2,000 in everybody's checking account right away. Boom, it can just happen, and I get this horribly inflationary, and all part of what you'd expect here at the end of a monetary system.
So when we get our hands on some physical bullion, gold and silver to protect our wealth, to get wealth outside of the system, real sound money, do you prefer one over the other in terms of gold or silver, or is the idea just to stack either one of them?
I've always held more gold personally, because the way I've always phrased it, Jesse, is gold should preserve your net worth, all of your hard work. It's like a lifeboat, take you from one port to the other across this thing. Because again, I always thought in the end, we'll switch back to some revalued gold, in a new monetary system. Then maybe you can take your gold and switch back out to whatever the new monetary system is at that time. But gold's your I guess net worth protection. Silver can be your purchasing power protection, but that hasn't worked out too well either. Again, because of these financialized markets where the price that is determined through the trading of futures contracts, which are never delivered. They're bought on margin with money that doesn't even exist. Banks take the short side of the contract with metal they don't have. So how is that price? So, but whatever, I'm kind of going down that road again. I own physical gold, physical silver. It is, like I said, and I just keep buying it. Why? Well, why do I want to? I mean, there's value to cash right now, obviously, but there, at 10% inflation every year, that's not a place you want to be either. So I keep buying. I've got other places. There's bullion companies that offer kind of like digital platform where you can take delivery in the future, but you can get access right away at spot without having to pay, the huge premiums that you see now. So that's what I keep doing.
Do you have any thoughts on platinum and palladium holding physical? Is that more of a speculation than sound money like gold or silver?
Yeah, I don't own either of them, and I never have. I followed palladium. I have followed it since about 2017 or 18, because the palladium markets and platinum too are structured just like gold and silver. You got these paper trades in New York, and you got the physical trades in London. And palladium got really tight beginning in 18 and 19. The price went from like 400 to 2,000. And then when the Russian Ukraine thing started, I don't even know what we got to, 3,000, 4,000, because Russia supplies like almost half the world's palladium. And the structure's the same. And so I followed it because I thought, maybe people wake up if palladium collapses and they look around and go, wait a second, all this monkey business of futures and forwards and stuff like that, and I don't have any actual physical. Well, if that's how it is in palladium, maybe that's how it is in silver and gold too. We haven't reached that point yet, but no, I don't. But I think the palladium, just that supply demand dynamic, and platinum too, really, because a lot of that comes from South Africa and other places that are subject to supply disruptions. They have sound fundamentals, but anyway, that's a long answer to a short question. No, I don't own either.
So before we started recording today, you mentioned you're also invested in uranium. What is it you see about uranium that makes you bullish on that commodity?
Well, I just think it's a very solid long-term play. Now, always keep in mind, I mean, we're like one Fukushima away from having this all blow up in our face, right? It's been 10 years now. And so, everybody's kind of moved on. But one good meltdown, that kind of thing near a populated, and everybody will say, we're never doing nuclear power again. So that it always comes with that little word of caution. Second thing is, it's an extraordinarily bullish thing in this, green energy. Everybody talks about, we all ought to drive electric cars. Okay, fine. Put one in every garage, and then you got to plug it in, right? It doesn't charge itself. Where's that energy going to come from when you run a refrigerator and an air conditioner and computers and, everything else at the same time? So it's got to come from somewhere. And, nuclear energy would seem to be pretty logical. And so all of those fundamentals that Rick Rule has talked about and others led me to think, yeah, you know what? I should diversify a little bit. And I've got the URA, which is a ETF. I got some UEC. I met a guy named Scott Melby, who runs a company called Uranium Royalty, company I know. Sprott has, done some stuff with physical uranium. And so I've got all that stuff, but it's just a little bit of what I do. The hard part is, this gets back to like my stockbroker days 30 years ago. If you back then, you were just trying to beat the bond market. You get 7% out of a municipal bond, right? So you get people to try, if you could get 10% out of owning Walmart for a year, I mean, you were a genius. If you could find stocks that went up 25% in a year, wow, you're really awesome. If you don't own something now, it goes up 25% inside of a month, you're an idiot. And so the key on the uranium thing, besides, being nimble, making sure you're checking the headlines every day for the next Fukushima, hopefully it never happens. Key on the uranium is just being patient and buying the dips, because if we're right about it fundamentally over time, and I'm not talking like 5 to 10 months, I'm talking the next 5 to 10 years, it's going to be an extraordinarily profitable trade. But the hard part is, again, not allowing yourself to be impatient and say, hey, that UEC hasn't done squat for the last 6 months. I'm going to go buy myself some Tesla because it's at a low, that sort of thing. That's the hard part, is remaining patient.
Well, Craig, thank you so much for joining us today. Really appreciated the conversation. For people who want to hear more from you and also the TF Metals Report, where can that be found online?
Well, it's right there, the tfmetalsreport.com. Coming up 11 and a half years now at doing it. I write a report every morning, kind of summarizing the news. Those reports they take a little while because there's sure a lot of news going on these days. And then we have a global community. So for some people that's morning, some people that's evening. So every afternoon I record a podcast that kind of summarizes the day again. And that's what everybody gets from me. It's about $15 a month, so it's not exorbitant. The main value, though, is the community, the people that are, again, global, politically diverse. But again, we all recognize, we're kind of in this storm together. So we got to help each other out. And I think that's what's really valuable, because you need community. You need to know your neighbors. You need to band together at this point. You can't just, be one man as an island kind of thing. And the community we have there is actually, I'm certain it's more valuable than what I do every day. So I just, I encourage people to check us out. I think even if you only join for a month, I think you'll probably end up sticking around.
Great. I'll put a link in the description below so people can find that. Thank you so much, and look forward to hopefully having you on again to continue the conversation.
Let's do it. Thank you, Jesse. It's been a pleasure.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.